Welcome to Real Estate Talk. We're tackling your questions about real estate. Today's question is, should I refinance my mortgage?
Yes.
And Courtney, I already know what you're going to say. I'm going to do the heavy lifting up front because you would say, well, what does it mean to refinance a mortgage?
Exactly.
That is the right question. So I think it's really, to me, the simplest way to describe it is replacing your current mortgage with a new one. And so that's going to involve going through the same process that you did to get that first loan, application, approval, closing a process and closing costs. And so why do it? Well, it can help you save money over time. That's really the reason people do it. It's when they see that the rates decreased and they have a higher interest rate. So they're trying to weigh whether or not it's in their financial best interest to go after that lower rate. It's not always as simple as, I have a 7% rate. I see that rates are at 4% now. Should I do it? There's obviously a lot more to it, which is why we're making this video. It's important to consider the costs and fees associated with refinancing, so you make sure it's that financially beneficial move that you're looking for.
Absolutely. And I will say, generally, when you're thinking about refinancing, the general rule of thumb is to refinance your mortgage when the interest rates are at least 1% lower than your current rate. But this isn't always the case. So based on your specific situation, it may be worth it to refinance when the interest rates are 0.5% lower, or sometimes it's better to wait. I'll give you a personal example, Joe. I have 4.75% interest rate on my home. And in 2021, rates were a lot lower, like in the low threes. I was considering refinancing at that point in time just because the rates had gone so low. So I didn't. We can talk about that on another episode.
Or off camera.
Yeah, exactly. But let's talk a little bit about the savings piece. Can you do a little bit of math work for us to paint a picture?
Yeah, for sure. So let's say you take out a 30-year loan at a $400,000 mortgage with a fixed rate of 7.2%. Your monthly interest and principal payment will be around $2,600. So a year later, interest rates dropped to 6.3%. And so it went from 7.2 to 6.3%. This is one of those borderline situations that you're talking about, but you do decide to refinance. Your new monthly interest and principal payment are reduced to about $2,435. That sounds good, right? You went from $2,600-ish, $2,635, I think is going to be the exact number, to $2,435. So you'll save about $200 a month, and that's $2,400 a year, $72,000 over 30 years. When you refinance into a new mortgage term, such as another 30 years, you're essentially starting that fresh 30-year period. And so this can help you lower monthly payments, but may increase your overall interest payments over the life of the loan compared to your original mortgage.
Yeah. And so thank you for doing the math, Joe, because you know me. I was not a math major in college. And so, yes, saving $200 a month in mortgage payments is actually really good for some people. But we can't miss the fact that there are costs associated with refinancing your mortgage. Okay. So I want to cover a few of those costs. First of all, the costs can range from 2 to 6% if we're just kind of giving you a range here. Costs include appraisals. So they do have to appraise the property. There's closing costs. They're going to check your credit. Depending on how much you're refinancing, you might have mortgage insurance. There's going to be some origination fees similar to when you first purchased the home. There might be a prepayment penalty, and there's probably going to be a title search as well, because you're almost like starting over with a new mortgage at this point. So, Joe, what else should they consider beyond these costs?
Yeah, so I touched on a little bit about just like what it takes to lower the payment. And you said, hold on a second, there are all these costs, upfront costs attached to it. And so before making this decision, I think really what it boils down to is like trying to find your break-even point, right? Where it's not just that A to B move because of the costs that you just got done telling us about. So this is like, what's the break-even point to recoup all the closing costs that come with refinancing? So again, let's just give an example to make it more tangible. If it costs $5,000 to refinance your home, your monthly savings from refinancing is $200 a month. $5,000 divided by that $200 is 25. So it will take you 25 months to break even. So in general, staying in your current house is best until you reach that break-even point to make sure that refinancing is worth it.
And let's talk a little bit about credit, because when you go to apply to refinance your home, you should be mindful of where your credit is right now. If you recently took out another loan, or maybe you had a late payment, your credit score may have gone down. And the higher the credit score, generally, the lower the interest rate. So that's something that you want to talk to your lender about, making sure your credit score has increased or at a minimum stayed the same, and that you meet the lender's minimum requirements before you refinance is crucial. So, Joe, final thoughts. Should you refinance right now? It's November 2024. Should you refinance?
The first thing you've got to look at, no matter what time it is, it's really what the current interest rate is. So this is probably piquing your interest if you're seeing headlines around a decrease in interest rates. Maybe there was a Fed decision that had downward pressure. Maybe it's something that the market's doing. But first, look at the interest rate to say, okay, this is much lower, or it seems like it's definitely lower than my current one, right? And then, of course, in exploring those costs that are associated with the refinancing, we broke down what some of those might be, but you're going to want to find out for what's true for your individual situation. And then, as we always say, like your long-term financial goals. Is this best for you right now?
Definitely. Because I kind of left everybody on a cliffhanger earlier in the video, I'll say in my experience, when I went to go refinance, I actually got stuck at the appraisal piece of it. Because number one, you do have to be mindful about what is happening with values in your area, home values. But why I got stuck is I'm in the country and I have multiple units. So like an ADU and an additional like in-law suite. And so they actually categorized my home as multifamily, even though it's a single family property. And that's where I got stuck. So it worked out, but also be mindful of what values are doing in your area before you decide to refinance as well.
So this gives you a foundational knowledge. If that's not clear already, we're just trying to give you the basics about refinancing a mortgage. It's important to establish that relationship with your lender, to dive deeper to your specific circumstance. And so you're making the most informed decision possible.
Absolutely, Joe. We'll provide more information in the description below, and we'll be back with another episode with tips to help you navigate the world of real estate. Let us know in the comments what questions you'd like us to answer in the future. We'll see you next time.